Joining us now, Peter Switzer, the founder of the Switzer's Report. Good morning to you, Pete. Well, usually you're full of positivity, but there's not much to be positive about this morning. We'll break up Wall Street and the FTSE 100. Let's go to the US first, the biggest drop since '87.
Yeah, 9.99%. Let's call it an even 10%. But guys, you know, 3 or 4 weeks ago when I first started mentioning coronavirus, you actually noted that I was showing negativity for the first time. And the big problem is we just don't know what are the economic implications of the coronavirus, and we didn't kind of expect a travel ban implemented by the US. We didn't think that sporting events could be, cancelled and games will go ahead without crowds. And I'll give you a classic example for those people who don't understand how the virus can actually affect the stock market. Take one of the most famous sporting teams in the world, Manchester United. It's actually a listed company. And I went and checked out what's happened to its share price since late February when the coronavirus started to, raise question marks. Its share price is down 31%.
Wow.
Well, that's actually the club I support, so perhaps
I knew that.
Now is the time I probably should be investing in it. But where's the floor? That's the problem with investors at the moment too, Pete. Where's the floor?
Yeah, well, no one can pick the floor, mate. And look, I think that probably the most useful thing to point out is probably two things. There's the famous poem of Rudyard Kipling which says, if you can keep your head when all around you are losing theirs. I think that's really relevant right now.
I thought it was Warren Buffett who said that.
Yeah, Warren Buffett said, be greedy when everyone's fearful. So
same thing, I guess.
Yeah.
Same sentiment, I mean.
In the modern context. But also there's a great quote from, related to Tom Hanks, and Tom Hanks, of course, is inextricably connected to the coronavirus, from the movie Bridge of Spies. He was a US lawyer counselling a Russian prisoner who was going to be going back to Russia, and the prisoner didn't know whether he'd be hailed as a hero or as a traitor, and Hanks said to him, "Are you worried?" And his reply was, "Would it help?" And I think that's really critical for anyone who's worried about the stock market now. Worrying's not going to help. Selling out now is not going to help. As long as you're in good quality assets, they will rebound. I interviewed Phil Riven of Ibis World right at the end when the GFC was really looking bad. And I was telling people I think it's probably time to start putting your toe back in the water. I said to Phil, what does the Australian stock market rebound after a crash? And he said, historically, it ranges between 30 and 80% in 1 year. So in many ways, as long as you're in quality assets, they will rebound, not to where you were, but at a lower level than when you were, because there is an economic problem that has to be dealt with. But I bet you this coronavirus ends up being a lot less impactful on the global economy than the stock market is currently assessing it as.
Well, the ASX seems to just be at the mercy of what's happening overseas. Why didn't the ASX react at all in a positive way to $17.6 billion worth of stimulus yesterday?
Yeah, it's a good question, Laura, and the bottom line is the answer you actually gave. Donald Trump came out with that US travel ban, and everyone's getting really serious about dealing with the coronavirus now, and it's escalating the economic negativity and the impacts on companies. But we can't work out what the real effects are going to be. Imagine, say, within 3 weeks, just like we saw in China, that the rates of infection and the death rates start coming down. Well, in 3 weeks' time, we might say, gee, we thought this was going to be a lot worse than this, and therefore the stock market will rebound. We're right in the middle of a hurricane or a bushfire right now, and we just have to batten down the hatches and wait and hope. And like I say, as long as you're in good quality assets, they will rebound, because the people who are making money out of this sell-off right now, they will be the buyers when the market gets ready to turn around.
So, I mean, if you do have shares, if you have a share portfolio, is now the tip just to forget about it, check in a couple of months' time?
Yeah, well, you keep watching us, and I'll tell you what I'm buying.
ETFs now, Pete?
Well, I think if you want a pretty good way of capturing the entire market and investing in the best 200 companies of Australia, there is an exchange-traded fund that will give you those top 200 companies, and the market will rebound, and you'll get that rebound, plus you'll get a dividend of about 4.5%. So I think it's not a bad way to go.
What do you like most out of the stimulus package yesterday? The $750 checks, or the instant asset write-off, something else entirely different?
I think the fact that there is a big chunk of money going to small business, that's good. The money in the hands of spenders, you asked me that question last week. You said, who should it go to? And I said, spenders. And they have targeted the people who will spend, and that's going to be good for the economy. You know, people who would never take the money and try and travel overseas. Of course, you can't travel overseas easily nowadays. All of that's good, and I think the fact that they're trying to spend it before June 30, $10 billion or so, that's going to be another positive for the economy.
Peter Switzer, you have yourself a good weekend, my friend.
Same to you.